Good morning, welcome to the ADS Securities Markets Update. Beginning with the the latest development from the US yesterday, the existing home sales came in again with another bad news or another disappointment, declining by more than expected or declining by 4.9% in January, comparing to a rise or another decline of 2.4%, while the estimates back then or in yesterday's it was expected to go down by only minus 1.8%. And basically this decline is the biggest month-over-month decline since February of 2011. The sales also fell again in units, the sales fell toward 4.82 million, down from 5.07 million, which is the lowest since April of 2014, when it was below 4 million. The Dallas Fed Manufacturing Index or Manufacturing Activity Index also unexpectedly collapsed further toward minus 11.2% in February, comparing to minus 4.4% in January, while the estimates back then were to rise slightly toward minus 4. And this is the second monthly decline in a row not seen since 2013, and also the biggest monthly decline also since May of 2013. These figures also led the major banks across the globe to cut the US GDP estimates for the first quarter of last year by 0.1%, down toward 2.6%. But Bloomberg Q1 or for the first quarter of 2015 estimates also collapsed toward 2.5%, down from the initial estimates, which basically it was around 3%. As for the Asian session today, eyes were on the 2 years inflation expectation in New Zealand, which also fell sharply toward 1.8% during the last quarter of last year to 1.8%, down from 2.06 during the fourth quarter of last year. And this is the lowest inflation estimate since more than 15 years, or since 1999 or the first quarter of 1999. Going forward to the European session today, there are only few economic releases across the session which may have a limited impact today ahead of the Eurogroup meetings. Beginning with the German final GDP is expected to remain stable at 0.6% in Q4 of last year, comparing to the same rate, of course, in the Q3 of the third quarter of last year. The year-over-year, the Eurozone year-over-year CPI and the core CPI are expected to remain stable at minus 0.6 and 0.6 in January respectively, while the month-over-month CPI is expected to decline by the most on the record, or by minus 1.6% in January, which would be again the biggest month-over-month decline on a record not seen ever. In the UK, eyes will be on the inflation report hearings from the Bank of England at 14 Abu Dhabi time, which basically it's around 10 in the morning GMT time, and we believe that a balanced statement is more likely in this meeting. The Eurogroup meetings will be held today across the day. So far, there is some sort of a positive sentiment or a positive estimate for a deal in the next few hours or days. However, the Germans may oppose some of the Greek plans, such as the wages increase, but we still believe that at some point a deal will be reached or will be announced in the next few hours or next few days. As for the US session today, there are a collection of economic releases and events which are likely to have a major impacts on the markets. But beginning with the services, the flash services PMI is expected to go up again toward 54.5 for the month of February, up from 54.2 in January, which would be also the second monthly increase in a row and the highest since November of last year. Also, the CB consumer confidence is expected to decline back toward 99.6 in February, down from 102.9 in January, which would be the first monthly decline in 2 months. But of course, it remains well near the highest level since the financial crisis. The Richmond Fed Manufacturing Index is also expected to remain stable at 6 in February, with no change for the month, also comparing to the month of January. But we believe at some point we might see some more also disappointment again. Finally, the S&P CS Composite 20 House Price Index is likely to slow down further to 4.3% in December, down from 4.31%, which would be also the 13th monthly decline or slowdown in a row. The main event for today, of course, will be the Federal Reserve Chair Yellen testimony at 19 Abu Dhabi time, which is around 15 GMT, which is likely to be very significant. And we still believe that Janet Yellen is likely to retreat again gradually from the June rate hike after the recent economic disappointments, in addition to or since the end of QE3, which is likely to weigh on the US dollar across the board again. As for today, I have 3 charts again for you today. We'll start with the charts that we spoke about at the West Texas last week. It was around 54. We said the stops should be above 54.40. The same the same formation remains, which basically a triple top on a 4-hour chart or daily chart is the same, but at the same time we have the trend line remains solid so far. Yesterday we ended up at almost a 50%, which is 48.91, which should be watched very closely, because a break below that level and then we would be looking at 47.65, which is 61% or 61.8% from the recent rally, from the recent lows at 43 toward the highs at 54.24. So we're still looking for more downside so far, but yesterday we ended up at around 50%, which is very technical to stay and to stabilize at that level. As for the second chart for today, we're looking at the Kiwi. We're still within the selling area that we mentioned last week, which is basically between the 50% and 60%. The 50% at 75.33 and the 61.8% is at 76.18. So far we haven't reached any of these, or one of these levels is basically just only the 75.33, which remains also a very solid resistance. And today, after the inflation estimates in New Zealand, which basically dropped to the lowest level since 1999, another sell-off came in during the Asian session toward 74.72, down from 75. So far, we still have the same negative view. We might get another rally maybe during the testimony of Janet Yellen, which may continue toward 76.18 before the downside continues. This is in case of any surprises by the Federal Reserve, Janet Yellen. Finally, we're looking at, that's Kiwi. Finally, gold daily. Again, we tested the same level yesterday, which remained within a 61.8. The daily close was well below a 1200. This is still positive, and at the same time the trend line remains solid, and the daily close yesterday, it was well above that level. So we're still watching a 1200, a break below that level with the daily and the weekly close below that level is likely to lead to another sell-off back to 1180 or even 1130 or 100 or 1130. This is it for today, and these are the economic releases and the technical analysis that we're looking at today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.